Short exercise 20-7. We're going to get practice calculating the costs transferred out of a work in process account. So this exercise is easier to do with scratch paper with T accounts. So what we've got is we've got two work in process accounts for this company. The first one is an unnamed department. And then this problem is working with the finishing department. So costs transfer from the first department into the finishing department, and then once they are finished, they leave this account and they go to the finished goods inventory account. So all three of these are inventory accounts. So the purpose of this exercise is to figure out how much cost-wise was transferred out of the finishing department and therefore transferred into the finishing or the finished goods department. So in this problem, we don't have to worry about any of the numbers in the unnamed process that precedes this process. We only have to worry about the numbers for the finishing department. So this problem will give us beginning balance, ending balance, and additions. So we have to know, where would we place these in our T account? So let's start with beginning balance. Where would the beginning balance go on a T account with a plus sign on the debit side? Well, the beginning balance obviously would be up here. And then let's say we have some costs that were added to the department. Where would they go? So additional costs, also called production costs, would go on the plus side. And what could these addition or production costs be? They could involve direct materials, direct labor, and or manufacturing overhead. And then where would we have, or where would we place goods or costs that were transferred out of the account? Well, if they're transferred out of the account, they make the account go down. Therefore, the transferred out information goes over here. And then finally, where would we place ending balance? Well, that's going to go on the plus side. So now all we have to do is plug in the numbers from up here and then find the missing variable. So the finishing department of Lee and Lewis Incorporated, the last department in the manufacturing process. So they're talking about the finishing department. It's the last one, meaning the next department would be the finished goods inventory. So the finishing department incurred costs of $220,000 during the month of June. So if they incurred some production costs, where would that go? Well, that goes right here. $220,000. And because I'm anal retentive, let me move this down, and let me move this down. Then it says if the June 1 balance in work in process for the finishing department is 0, so where would we put the June 1 balance? So we're talking about the month of June, so the beginning balance would go here. So this is 0. So our costs to account for are $220,000 plus 0. So the costs accounted for are going to be the transferred out plus the ending balance. So let's see what else it says. Then it says the June 30th balance is $70,000. So the beginning balance was 0. So where would I put the ending balance? The ending balance goes down here. All right, so we had 0 costs to begin with. We added $220,000, and we ended up with $70,000. So how much was transferred out? So we're going to take this plus this, so add these two, the cost to account for, and then subtract the ending balance. So in my Excel, I go beginning plus additions, also costs, also called production costs, minus the ending balance equals 150,000. So the costs transferred out were $150,000. So remember that the cost to be accounted for, these two, have to equal the costs accounted for, the ending balance plus the amount transferred out. So now we can fill in this information. It says determine the formula, then enter the amounts to calculate the amount transferred to finished goods. So what amount was transferred to finished goods? This amount here. So in reality, we would, if we were doing the journal entry, we would need a debit for finished goods inventory because they were transferred from the finishing department to finished goods. So the formula is you take your beginning work in process, the 0. You add your additions, also called production costs, which could be direct materials and or direct labor and or manufacturing overhead, which is 220. And then you subtract your ending balance, ending work in process of 70, gives you the amount transferred to finished goods inventory, which would be this 150,000. So just a quick review, the way process costing works is over here on the left, we would have the raw materials. I don't have room for that T account. So the raw materials will be taken out of that and put in work in process for the first department. And this might be like a cutting department if we're talking about the puzzles or something like that. And then once they're done with that department, they go into the finishing department. That's why the arrows go from left to right. And then when they're finished here, they go into the finished goods inventory. The other thing that's really important to understand, before we do the production cost report, you have to know the difference between to account for and accounted for. So beginning balance plus the additions, this is to account for, the costs to account for. They must equal the amounts accounted for, which is the amount transferred out plus the ending balance. You can kind of think of it as the same as your bank account. The beginning balance of your bank account, the beginning of the month, plus any deposits, additions, have to equal the amount that you spent plus the amount that's left over in your bank account at the end of the month. So that's it for this product. That's it for this exercise.